We have microfinance banks and fintech. Most recently, we have equity options, angel investments, crowdfunding, venture capitalists, and then business credits. I think I would like to make this this session a bit interactive. I would like to know if anyone has ever accessed any financing option for their business in the past. If you have, you can just send a yes on the chat. Do we have anyone who has accessed finance for their businesses in the past?
Yes, we
Yes,
have
banks and loans.
Oluwa Femi here.
Beautiful. Microfinance bank, beautiful. So it looks to me like some of us have actually accessed finance for our businesses before. So let's dive in and then look at more details regarding these financing options we have for SMEs. Okay, let's move to the next slides. So first of all, we'll be looking at bank loans. Bank loans are mostly issued by commercial banks, Islamic banks, and also microfinance banks. Some of the characteristics of bank loans are they are usually very, very stringent rules. They usually have a list of requirements because they are regulated by the central bank and other regulatory agencies. We all know how banks mostly get their funds. They get their funds from shareholders, and shareholders invest in these businesses because they want returns on those investments. As such, the banks would not just give out monies to businesses which they know they might not be able to recover. That is why when you go to a bank to access loans, you usually have them give you a list of requirements such as guarantors. You're bringing your bank statements so they can see your transaction history. They want to be sure that you're actually qualified to be able to access that loan. One of the issues we also have with bank loans is there are usually regulatory bottlenecks. We have huge compliance levels. So you would have to be very, very compliant to be able to access a bank loan. We also have various risks associated with bank loans. If you take a collateralized loan, for instance, which might require you giving up one of your assets to be able to access a bank loan, you stand a risk of also losing that asset if you're not able to pay timely. Banks would usually also have a collateral requirement in some instances. So this makes assessing bank loans seem a bit difficult, even though it comes with its benefits, depending on which of the banks you're accessing a loan from. Loans can usually be obtained from commercial banks. Some of the examples we have are Trust Bank Limited, Bank Windec, Eswatini Bank, Zanaco. We have Standard Bank, which is present in a lot of African countries. We also have Stanbic IBTC in Nigeria, which is regulated, which is a member of the Standard Bank Group. There are also a lot of Nigerian banks, such as Access, UBA, which are resident in other West African countries and also in other parts of the world as well. For Islamic banks, we have Taj Bank and Jaiz Bank. These banks mostly give loans. Their requirements might not be as stringent as those of the commercial banks, and they have something in Islamic finance called riba, which is interest. So the Islamic banks give loans without interest, known as riba. They have other ways of recovering their monies when they give loans to you. We also have microfinance banks such as Money Point, Carbon, Rent Money, which are popular in Nigeria. With these banks, you mostly do not have to submit any physical documents. You're able to do your applications online, submit all your documentation online, you get the approval online, and you have the funds disbursed to your business account. We'll look at the next funding option, which is equity and venture capital. Now, what is equity? When a business brings equity on board, it means they are giving a stake of their business to either an individual or organization. In equity or in shareholding, we usually have individual shareholders and institutional shareholders. Institutional shareholders refer to organizations which invest their funds in other businesses or other organizations for them to be able to make returns and also give to their own shareholders. Now, when you bring equity into your business, it could lead to a dilution of shareholdings and control. It means that if, for instance, my business is Ngozi Nigeria Limited, and originally I had 700,000 shares out of the 1 million shares in my business, and I decide to bring a shareholder on board, that shareholder might end up taking maybe another 100,000 or 200,000 of my shares, meaning I would have less shareholdings, and it could also lead to a dilution of control because that shareholder will also want to exercise some level of control over that business. With equity, there might also be a lack of goal congruence. Now, this means ensuring that the goals of the business owner also align with all the other stakeholders or shareholders in the business. It might become more difficult for you to agree with the other shareholders in the business compared to when you are the sole decision maker or when you're in control of that business and you make majority of the decisions. We also have risk and business losses, which are shared by all shareholders in the business. It means when the business is profitable, you all share the profits. When the business is also making losses, you share the losses and also the risks that come with doing that business, such as business risk, reputational risk, and everything that comes with that business. With equity financing, there's usually a requirement to have a high rate of return, and this makes it very, very expensive. Then there's also a no repayment obligation. When someone invests in your business or has a stake in your business, it's not the same thing as taking a loan. When you take a loan from a financial institution, we all know that in Nigeria, most times, most banks do not even give moratorium. So you start paying that bank loan from possibly the next month or the next week if it's a weekly repayment. As such, equity investments would usually not have a repayment option compared to when you have taken a loan from a financial institution. The next financing option we'll be looking at is venture capital. This requires investors to also take a stake. It requires investors putting in a stake to finance a business. It's most common with startups, and it usually has a lot of due diligence requirements. For instance, for someone who wants to invest, a venture capitalist that wants to invest in your business, they'll do a lot of risk analysis. They'll want to be sure that the business is compliant with the rules and regulations of that country. You're paying your taxes. You're not taking unnecessary risk that would make that venture to be unprofitable. Then the venture capitalist would also want to be involved in the running of the affairs of the business. So it's no longer business as usual, whereby you're the only one running the affairs of the business, taking decisions for the business, deciding how much your operational expenses should be, or setting your budget. The venture capitalist would be involved in the management of that business. Now, with venture capitalists, we would usually have VCs or venture capitalists exiting after a certain period of time. Next slide, please. Then we also have angel investors. Who are angel investors? They are private investors who usually invest in small or startup businesses for a return. For instance, I might have a friend who I know is a high wealthy. The person likely has a lot of funds. Say, for instance, I have a friend that is maybe not as wealthy as Dangote or $10, but has like a huge amount of money, and I'm looking to start up a business. I can approach this person and say, oh, I have a business idea. I would like to share a proposal with you. And if it works with you and you invest in my business, I'll give you this rate of return. This works. I have actually done this in the past and it worked for me. So instead of going through financial institutions or going through the banks and then and signing documents, I approach an individual and say, oh, I have a profitable or viable business idea. We analyze it together. We have an agreement, and then you get an amount of return after a certain period. It could be a year, it could be 6 months, it could be 3 months, or whatever it is. Now, with this source of funding, the investment terms are usually negotiable because you're able to agree with this person, and it's not as stringent as what you would have with commercial banks. We also have another form of financing which businesses can have, which is called, so it means I, as a business, I can approach another business or a vendor and mention to them that, oh, I am interested in a certain product or a certain service, but I am unable to pay cash immediately and would like to pay in 30 days, 60 days, 90 days, whatever the agreement is. If you look at the images on the right-hand side, we have a supermarket on the right-hand side. Most supermarkets actually have this model running for their businesses. So when you've built a business over time and people know your business, it's easy to have this kind of partnerships and have agreements with other businesses. And it comes at a lower cost of funding because you are not paying when you get money from the angel investors or when you get money from the commercial banks or the microfinance banks. They organize it without an interest on it. You might only pay additional funds where you start to default on the agreed payment terms. For you to access this kind of credits, you usually have to agree with that business on the amount of credits you would like, and this has to be approved by the supplier. The number of days also have to be indicated, whether it's 30 days, 60 days, or 90 days. And you also have to prove as a business that you are credit worthy for you to be able to access this line of finance. Like I mentioned earlier, supermarkets usually have this model. And then there's another model which businesses can also access, especially if you're in the retail business. And it's called the sales or return model, whereby you partner with businesses, they stock up your store, and then if you're able to sell, you remit as you sell. If you're able to sell those products after a certain period of time, then you return those products to the vendors. But again, those products must be in a good state, must not have expired, and you must also have made a lot of efforts to be able to market these products. Some of the benefits of supplier credits are it boosts cash flow and improves working capital, and it's also dependent on trust and business reputation. I would like to use an example I currently have. Late last year, I started using Bolt to do deliveries for my business because I noticed that my bike was always having issues and I was always having issues with the delivery person. Now, what did I do? Because I was using Bolt for my deliveries over time, my deliveries increased. And in January this year, Bolt called me up and offered to give me a credit line of a certain amount, whereby I only pay in 30 to 40 days. Now, what does this do? It means that my customers would order goods for me, pay me cash immediately for me to be able to deliver their items. But again, I don't get to pay both this money until after 30 days, meaning I can actually choose to invest those funds I have gotten from my customers, put it to good use before I pay both in a number of days. So these are things that you can do over time to be able to grow your finances for your business. Any questions so far, or should we wait till the end of the presentation?
I think we should wait until after presentation.
Okay, that's fine then. Okay, so next we'll look at the examples of funding options we have in Africa. So we have the Tony Elumelu Foundation Entrepreneurship Program, which really has a $5,000 seed capital and mentorship for African entrepreneurs. I know that this usually happens in Q1 of every year. We also have the MasterCard Foundation. We have the African Development Bank. They have a lot of programs which they use to support support youths and also women entrepreneurs. We have the World Bank or International Finance Corporation SME support programs. We have the UNDP. We have the UN agencies. And we also have grants which are given to businesses and also business development programs. We have GIZ, which is a German development agency. They support a lot of SMEs in Nigeria and around the world. We have business grants, advisory, digital skills training for SMEs. I know that in the last, I think 1 week or 2 weeks, I saw MTN advertising some trainings, free trainings for entrepreneurs. And I know of other organizations that have done this in the past. Now, training comes at a fee. If you ask someone to pay, for instance, for a data analytics program or for a Microsoft Excel training, it will usually come at a cost. But there are lots of organizations offering these trainings for free. So I look at this as also a funding option which businesses are getting. If organizations such as MTN were not sponsoring these programs, would have your business have to put in a budget on a yearly basis or quarterly basis for training of its employees, for them to be able to attain certain skills and also grow the business. So I would consider digital skills trainings and the many other trainings offered by various institutions as a funding option as well. Okay, next we look at the key challenges we face when we're trying to access funding for SMEs or for our businesses. We have limited access to capital. We all know that we have a lot of SMEs in Nigeria and it's difficult to actually give everyone what they would like. I believe that's why in economics we were taught opportunity costs many years ago, scale of preference and all of those things. We all know that the resources would never be enough for everyone. We also have high interest rates. From my practical experience, with the commercial banks, it's more stringent to access funding. But most times, the funding would usually come at a lower cost. Why? Because the banks usually do way more due diligence, check your financial statements, check your business records, check your physical location to be sure that your business exists and therefore offer lower interest rates. With the microfinance banks, you might stay in the comfort of your home or your office and be able to access a loan. But then at what interest rates does it come at? Most microfinance banks will charge you interest rates of, say, 5% or even more. And then what are the repayment times? The repayment times are usually so short, sometimes as short as 3 months or even 6 months, meaning it stresses the business cash flow and does not make it very easy for the business to be able to access loans. So I've covered high interest rates and short repayment periods. We also have lack of education or knowledge about financing options. How many individuals that run business genuinely know about the many financing options that businesses have? Many people do not know about financing options, and this impacts negatively on the ability of SMEs or businesses to access financing. We also have improper documentation. A business that does not keep records would find it difficult to access funding. We have low credit scores. In Nigeria, in the last few years, I'm aware that there's been a credit bureau, and there are certain organizations registered with that credit bureau to be able to document credit information about businesses and about individuals. Now, this information, loans or facilities you've taken over a period of time, how well you repaid those loans, and this impacts your credit score. If you have a high credit score, the chances of you accessing a loan would usually be high. But if you have a low credit score, the chances of you accessing a loan facility from a financial institution would also be very, very low. We also have collateral requirements. With loans that require collateral, most times their interest rates are usually lower because the bank knows that they already have something that they can hold on to in case of a default. Not everyone is able to provide a collateral for loans. But in recent times, I think I've seen a billboard for two organizations, AutoCheck and some other organization, whereby if you have a vehicle, you can actually take the vehicle to them and then it acts as a collateral for you to be able to access a loan. But how many SMEs actually have a tangible collateral that they can give to a financial institution to be able to access a loan? We also have guarantor requests. Most times it's difficult to find credible individuals who can act as guarantors for businesses. And also reputational risk. Most people are afraid to act as guarantors for businesses because of the chances of default by the individuals which they have acted as guarantors for. We also have regulatory bottlenecks from the various regulatory authorities in our various countries. Next, we'll be looking at how we can prepare for funding for our businesses. The first step I would always advise every organization is register your business in your country according to the regulatory requirements. No bank wants to give a loan to a business that is not duly registered. So you must register your businesses to be able to access proper funding from financial institutions, from donor agencies, from the World Bank, from the UN agencies. They all want to be sure that you're doing your business in the compliant way by first of all being registered. Then the next step is to keep organized and accurate business records. This includes things such as your financial statements, ensuring you're separating your personal finances from your business expenses, analyzing your records on a monthly basis to know where you actually have cash needs to be able to take proper decisions. Then preparing and documenting your business plan. If you have a documented business plan, it shows where your business likely wants to be over the next few years, and it makes decision making for the financial institutions much easier. Then it helps when you have a clear strategy. You have an annual budget or a quarterly budget, which you review against your actual figures from time to time. If you also have a marketing plan and you have strong branding, this helps to ensure that you have proper funding. For instance, if a business applies for a loan or a grant and they tell me, oh, the name of my business is XYZ Limited, but I don't have, say, a website, I'm not registered on Google, I'm not on Instagram, I don't have any visibility whatsoever, I'll find it difficult to trust such a business and be able to give it resources, give it a loan or give it a grant and trust that it will put it to good use. You've been able to brand your business, you have a proper logo, you've been able to do marketing either on Google, you have ads, you run Google ads on Facebook, you run ads on Facebook, on Instagram, or you do some form of marketing. I would find it easy to be able to make a decision and finance or support such a business. Then do you keep up with trends in your industry? If you're selling foodstuff, for instance, are you aware what's happening in your industry? Do you know what the prices are currently saying? Do you know if there have been innovations in that industry? You must be knowledgeable in that industry that you have chosen to operate in. Then you should have documented organizational policies for your finance department, for human resources. You should have policies for sales, for marketing, and for everything that you do in your business. You can also choose to introduce sustainability programs. When I say sustainability programs, there are a lot of things that are covered. We all know what has been happening with global warming. We hear people talking about, going green, printing less, recycling bags. When you put these things into your business, you see that even investors will be more interested by, saving its recycling paper, because if you choose to use paper bags over plastic bags, which end up in the sea and cause harm to aquatic life, right? you'd be able to access funding much more easily and attract attention from even the international organizations. Now, these are the various ways that we can prepare our organizations, no matter how small, for funding from banks or from other organizations. Next steps we should take when we want to access funding.
Thank you, Madam Nongo. We are not certain if this is still a network issue. We also would like to welcome members as they've joined into this platform of ICBC Launch and Learn June series. I would like to welcome our participants. We have taken note of a question from Mr. Uthman Zakaria, and we want to encourage questions to be sent to the chat forum. We'll take your questions, and we believe Madam Nongo will attend to your questions in due time. Madam Nongo, are you here again?
Yes, please, I'm here. Please let me know if
you.
you can hear me. Okay.
Yes, we can hear you. Thank you.
Okay, so would you want me to take the question, or can I go ahead and take the question afterwards?
Your schedule, please, as preferred. Thank you.
Okay, so let me take that question quickly, just so that we don't miss it. So a credit score is a score that is usually assigned to an individual, and there are certain factors that will be considered in giving you a credit score. For instance, have you accessed a loan before? Have you repaid that loan on time? How many loans do you have running? Are you in default? Have you taken loans that have exceeded your repayment ability? These are factors that would usually be taken into consideration in giving an individual a credit score. If you haven't taken a loan before, you most likely have like a low credit score. Most people are afraid to take loans, but without taking a loan, you would most likely not have a credit score or a good credit score. I hope that clarifies it somewhat, Mr. Othman.
Thank you, Madam Nongo. Can I ask a question from that credit score, is it a Nigerian thing or a diaspora thing? Is it an American thing? Do we have this status, this kind of statistics here in Nigeria? Thank you.
Yes, we do. Yes, we do. It's a global thing. If you go to other parts of the world, you hear people talk about credit cards, but we have credit cards even in Nigeria. We have credit cards in Nigeria. So if you have a credit card, it gives you a credit score. So this is handled in Nigeria by the Credit Bureau, which is regulated by the Central Bank of Nigeria. And as I know, there are, I think, two credit bureaus in Nigeria. I can't remember their names right now, but we have two credit bureaus in Nigeria. So when you take a loan from a financial institution as it is now, there's a central database where that loan is booked. And on a monthly basis, your financial institution goes there to go and update your details to see if you have paid that loan on time or not. If you've also defaulted, that loan is also shown. So when you want to take a loan with a financial institution, for instance, the banks would go and check your credit score using your BVN. Now, with your BVN, all your bank accounts are linked together. So once your BVN is put in, all the loans you have taken from all the financial institutions, whatever credit cards you have, they all show up in that portal. And your performance shows this also, based on that performance, your credit score is built. I don't know if that clarifies it.
Thank you, doctor. Thank you.
I'm not a doctor, though.
We may get there.
Hello. Yes, I hope so. I hope so. I think that's a source of inspiration for me, actually. When you said that, I just kept saying, this is probably an opportunity for me to make a move. Okay, so would move to the next slide, the funding process. Now, when you want to access funding for your business, what are the steps you need to take? First of all, you need to identify your funding needs. What do you need funds for? A lot of businesses say, a lot of individuals or businesses would say, oh, I need funding, I need funding, I need funding. But have you actually analyzed your business to see what you need funding for? Do you need funding for marketing? Do you want to do more ads? Do you need funding for inventory items in your store? Do you need it to be able to train your staff better? What do you actually need funding for? You first of all need to identify the requirements that your business needs to be able to know what amount of funding do you need. For instance, somebody will say, oh, my business is suffering. No, if only I had funds, I would have done this, I would have done this. How much funds do you actually need? Have you checked that, maybe your customer base has increased by 500 customers and you're not able to meet demand and you need, say, 10 million naira? Have you been able to assess that? If you've not assessed that, then you haven't even identified the funding need your business requires. Next, you look at the options. We've gone through a number of options that a business would usually go through when they need to access funding for their businesses. We have options such as the traditional bank loans. We have savings for those who probably have jobs and are able to make savings and then start up their businesses on the side. We have grants for startups and a whole lot. You need to explore the various funding sources to know which would actually be able to meet your needs. If you're a business that has just started up with practically no business records, you've not made any sale, you've not proven to the financial institutions that there's something possibly viable with your business, how then do you approach a bank to give you a loan? If you've not sold anything, if you've not recorded any transaction, I don't think any bank would give you a loan. So you need to look at the various options and know which would work for you. If you're starting a small business, say from your home, you can choose to approach your friends. You can choose to approach your family members and say, oh, I have a business idea, a viable business idea. And of course, if they believe in you, they might be able to support you with some funding. Next, you need to prepare your documentation. Gather all necessary information to support your funding application. If you're applying for a bank loan, the first requirement the banks will usually ask you for, like I mentioned earlier, would be your BVN, because they want to check your credit history to see what's going on with you in terms of your credit score and what you've been able to do with credit in the past. The banks will also ask for your bank statements to see how well you've had transactions going in. Now, for some individuals, sometimes they just put in fictitious amounts, possibly put in funds to go into the business and come out. I would like to say that does not help your business in any way, because you might end up accessing funds that you genuinely do not need and not put it to the best use. So first of all, you need to put together, if it's your bank statements, your company registration documents, tax compliance documents, audited financial statements. If you need to get guarantors, if you need to get post-dated checks, you need to put together all these documents. If you need to put together a budget, a cash flow projection showing where you think your business is going to be in terms of cash in the next few months, or the impact that loan would have on your business in the next few months, then you need to put together all of this documentation to be able to support your funding requests. Next, you submit your application. If it's a bank loan, if it's a grant, whatever source of finance you're looking to access, you submit the relevant documentation for you to be able to, for the organization to be able to review and also take a decision as to whether they're going to approve that request or reject it. Next, we look at solutions, various solutions, SMEs, various solutions for SME funding. As an SME, if you're just a startup, like I said, you most likely would not be able to access a bank loan. What other options would you look at? You need to look at various options of funding. That's why we have like a tall list of funding options for various businesses. So as a business or as an SME, you need to explore the various funding options that your business has. You also need to be able to build a credit history to improve credit score. Do not run away from taking loans if your business genuinely needs a loan. You just never know when you might need a big loan. If you've not taken a 100,000 naira loan and showing that you're able to pay back that loan, the day you need 100 million, no financial institution would give it to you. So it helps most times to take loans and increase the values of those loans over a period of time and show your capability of paying those loans to be able to build credibility for yourself and for your business. Sensitization on financing options for businesses. When you want to take get funding for your business, consult an expert to be able to discuss with you and look at your current business needs so that they can align or let you know the best funding option that aligns with your business goals. For instance, if you're a business that doesn't have regular cash flow, would it make sense for you to take a bank loan where you have to start repaying immediately? If you're an if you're a company or a business that imports goods and you know that it's going to take you 3 months to bring those goods into the country, does it make sense for you to take a loan and start paying back that loan immediately when you haven't even received the goods and you've started selling them? Would you be able to start paying that loan immediately? I would advise that if you need to access funding at any point in time, you consult a finance expert or a business expert or your financial institution to be able to look at the best option that works for your business. Business management trainings. As a business owner or a business, you need to attend as many trainings as possible to be able to improve your business competence so that you can know the best funding option that works for your business. I already talked about utilizing consultants or experts. With this, I believe that as an SME, we should be able to get better funding for our businesses. And then now we're on the last slide. As a business, when do you actually seek finance for your business? Sometimes we need to acquire assets. In Nigeria currently, we have issues with electricity, and the rave recently has been for most people to go with solar financing because we've had increased electricity bills. If you need to purchase an inverter, for instance, that would be an asset in finance terms. And this can be gotten by lease, or you can pay a certain percentage and pay the balance over a certain period of time. This is where trade financing. The Islamic banks, for instance, I know they do something called trade finance. For instance, you want to buy goods, you submit your invoice to them, and then they pay for those goods, and then you repay over a certain period of time. Other ways of inventory financing would be the sale or return option I spoke about that most retail businesses or supermarkets also have. Then we have short-term capital needs or working capital. When you have short-term capital needs, such as cash for a short while or cash to either buy inventory, pay certain expenses that you just need to sort out immediately. You can also access finance either through bank overdrafts from your financial institution or some short-term loans that you can pay in perhaps 30 to 90 days. You can also seek business finance when you have increasing customer demands. If at the time you started your business, you were selling perhaps a crate of egg a day, and currently the demand has risen to 30 crates of eggs a day, you'd realize that if you don't have the capital to be able to get 30 crates of eggs to satisfy your customers or beyond 30 eggs, you'll be losing your market share to other businesses which have the capability of actually selling that much eggs in a day. So if your customer demands are increasing, then it's advisable that you access finance either by taking a loan or looking for a business which can give you perhaps eggs, and you pay back immediately. You sell, or you pay back every few days or so. When you have new projects or you're looking to expand either into new territories, new locations, have new business lines, then you might also want to consider seeking business finance. When you take loans, for instance, When you take loans, they usually have tax benefits. Now, when the tax man is calculating your taxes for the year, if you have taken a loan, the interest on that loan is usually taken out before calculating your taxable profits. So when you take loans for your businesses, they usually have a tax benefit. They can lower the taxes that you actually pay as a business. Debt refinancing. If you currently have a loan that requires you to pay, say, an interest rate of 30% per annum, and another financial institution comes to you and says, oh, we can give you a loan for, say, 15% per annum, what would you do? You most likely find a way to go for the loan that has a lower interest rate, just so that you can have savings on your interest expenses and finance costs. There are changes in regulation. For instance, maybe the industry you operate in says, oh, share capital has been increased from, say, $1 million to $10 million, and you don't have $10 million. What do? It means you need to raise capital, or you need to seek business finance. One way of doing that would be to sell shares, which is equity stake in your business, to be able to raise more capital, just for you to be able to remain in business. These are the various reasons why various points for their organizations or for their businesses. Thank you. Thank you. I think we've come to the end of this presentation. If you have any questions, you may send them. You may perhaps unmute and ask the questions, or type them in the chat box so we can respond to them quickly. Thank you.
Thank you, Mimi Nongo, head of ICBC Abuja, industrialists, advocates of for women in entrepreneurs. Thank you very much for having dedicated time, having dedicated resources to bring this very thoughtful and insightful delivery to us at ICBC Global, as we believe ICBC Namibia, Gambia, and the Canada, and all other areas of ICBC in the world are here on this platform. We really do appreciate your time. We thank you for your contribution. Most especially, we want to thank these participants that are here. The floor is open to questions. Please ask questions. I have a long list of questions from this point of moderating, but it is all about our participants. I want to encourage you to please send in your questions. The floor is open. Thank you. So
Okay,
there's a chat.
Yeah. So I have a question from my head of learning. He says, if you have not taken a 100,000 naira loan and repay to build your credit score, the day I need 100 million loan, I might not get. Are you saying loan is an asset? So I would say yes or no. Now, I don't know if this would come as a surprise to anyone, but there's almost no business that doesn't operate on loan or on financing. Even Dangote, who is so wealthy, takes loans. His organization they probably take products from other businesses or other organizations on credit as well. So I would say yes, taking a loan can seemingly be an asset for a business, because it helps to build your reputation, helps to build goodwill, and helps to build a credit score. So I can refer to that credit score as an asset. And we all know, even as individuals, if your friend comes to you today and asks you for urgent 10K, and you give the urgent 10K to them, and they repay that 10K in, say, a month as promised, how would you classify that person? You'd classify that person as someone who has integrity. Now, that integrity is the credibility we're talking about, and that's where the reputation, which is an asset, comes in. I hope with this I have answered your question.
Thank you, Madam Nongo. There's another question on the chat. Participants,
Okay,
please send in your questions.
what is the most feasible sources of funding for the Nigerian SME from my financial experience? So there are many sources of financing. I'll use myself as an example. I started my business while I still had a 9 to 5, and that acted as a great source of income for my business because I was able to invest part of my income into the business and then gradually grew it. I also took advantage of the opportunity that I had access to loans, which were at low interest because my salary acted as a collateral at that point. So I was able to access loans and I put those loans into my business and used them to grow my business. I was also able to access funds from family, from friends to be able to grow my business over time. So I would say if you have a 9 to 5, for instance, and the interest rates are good and you'd want to start a business on the side, that can be one feasible way of getting funding for your business. I also mentioned free trainings, which I classify as a source of finance for businesses. Free trainings, which we also have banks, microfinance banks, which give interest seemingly at high rates and short repayment periods. We also have commercial banks. These are also feasible ways of getting funding for your businesses.
Thank you,
Okay,
ma'am,
I have another question.
attending to that question.
Yes, please, I'll share my details with you. Is there any financial institution that gives loans at single digits interest in Lagos State? This I can't say for sure. I'm not sure I'm privy to that information, but perhaps this is something we can look at and come back to you. But I know the Bank of Industry, for instance, gives low interest rates. I'm not sure if it's single digits, but Bank of Industry certainly gives low interest rates. How does an SME prepare to qualify for family and friend loans or funding? So first of all, I'd like to say that from my experience, if you start a business and you think that you're starting a business because your family and friends would patronize you, I would like to say that's you should take that thought off your mind. You shouldn't start your business because your family and friends would patronize you. If you look at Nigeria, for instance, we have a population of over 200 million. And for me, this is actually a good environment for doing business. So when you start business, first things first, you have to be consistent in what you're doing. If you're consistent and your family and friends see that even outsiders, people who do not know you, are patronizing you, they would have confidence in your business and be able to invest in your business. If they also see that you're serious minded about it, the way you handle the business shows like a bit of professionalism, and you're able to keep proper records and have like a proper plan, it'll be easy to approach family and friends for such loans and such funding. And again, credibility and integrity also come into play here. Okay, someone has said INT'L gives single-digit loan. I took their loan before in 2025. Their office is at Ikeja Post Office premises. Thank you for this feedback. So I think we already have an answer here. INT'L, which is I think under CBN, gives single-digit loans. Okay, we have another question. How does an SME get further education on trade finance, like Sterling Bank reference that you gave? Was that Sterling Bank? So I know that a lot of financial institutions also do a lot of trainings for entrepreneurs that bank with them. 2 days ago, I attended an event regarding, I think, branding and marketing for SMEs that was organized by Access Bank because I bank with Access Bank. So if you bank with a certain financial institution, for instance, you'd be able to ask questions regarding trade finance, either through your relationship manager or through events organized by these financial institutions. A lot of them are stepping up their game by having even physical events for their customers. So you may want to approach your bank to be able to get further information regarding trade finance. Oh, I think it was Jaiz Bank and Taj Bank I mentioned, Islamic Bank. The Islamic banks, they do that. Okay, any more questions?
There's a question.
Okay,
A lot of women. Okay, go ahead, sir.
Oh yes, Ajo Thrift. I'll tell you, this has also helped me a great deal. I'm so sorry, I actually forgot to mention this, but it has helped me a great deal. So this is also another cheap way of raising funds for your business, but it also comes with its risk, because in a situation whereby you're doing a job with people who are not trustworthy, you have instances where people may have maybe the first person collects I know this as contribution or adashi based on where I come from. You see where people contribute, maybe we've all agreed that we're contributing 20,000 on a monthly basis, and then in the first month, if we're 10 people in the first month, one person gets 180,000. There have been instances where people contribute, the first person takes, the second person takes, and then when it gets to your turn, you have people who are saying, oh, sorry, I can't pay because of one reason or the other. Sadly, Ajo Thrift is an informal way of assessing credits. So there are currently no credit ratings that I am aware of regarding Ajo Thrift, but it's a very, very good way of raising funds for your business because it comes at no interest whatsoever. Okay, where is the place of the cooperative in funding the Nigerian SMEs? We have the stories of the USC and cooperative credit aids. What is the Nigerian status of cooperatives for SMEs? Okay, so as far as I know, there are cooperatives. I, for one, has not accessed financing through any cooperatives, but I'm aware of cooperatives that exist, sometimes in organization or with groups of people that have common goals. As much as I know this exists, I'm not sure it has a significant impact, even though I've heard feedback from people who have been able to access loans from cooperatives. And I think this also comes at really, really low interest rates, and the requirements most times are not that stringent. The major requirement is usually, okay, you must have been a part of the cooperative for a certain period of time for you to access a certain amount, and perhaps the amount you can access cannot exceed either the amount you've saved or something. So I know that the cooperatives are also playing like a huge role in the role of assessing credits in Nigeria.
Excellence, Madam Nongo. Excellence. Thank you very much. We realize that your delivery has brought about so many interesting questions. We realize that many on this platform are looking forward to meeting you, even directly. We all welcome to ICBC Abuja. I believe they have open doors, ICBC Lagos, ICBC Nigeria. ICBC is expanding its arms all over Nigeria. And we want to say, please find us, find ICBC through the links, the social media chat sent to, links sent to the chat. And then we know we'll be there to receive your responses and to increase even by having you as a member. Thank you very much. Madam Nongo, we want to really appreciate you for this time. The floor is still yours. We don't know where. Do you want to wrap up this delivery before we hand over this platform to the chairman of the ICBC Launch and Learn for the June edition? Thank you. It's been a pleasure having you on this platform with us. Thank you.
Yeah, thank you so much. Thank you.
Okay.
Amazing. The moderator, thank you for an amazing moderation. Thank you so much. And our facilitator, you've done amazingly well. Thank you so much. But before you give your final note, before you give your final word, I know you have one major advice to give to us and to encourage us and to a passing word. But before you give that, I quickly want to encourage everyone to please take some 60 seconds to fill the feedback form, because there is no point in what we're doing if we don't get the feedback from us. So please, there is a feedback link on the chat room right now. Please kindly go to the chat room right now and hit that link. Give us your feedback. We need to improve on what we are doing so that we can give you a better experience going forward. And before that as well, I want to know how many people is joining us today for the first time. This is your first time joining us, please. Today is your first time joining us. Let me see your hand. Today is your first time joining us. It's your first time experience. Wow, 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 wow. Thank you. Thank you so much. Thank you for joining us. Thank you. Amazing, amazing. God bless you. Thank you. I want to quickly give us thank you so much. Thank you, thank you, thank you. And I'm sure you had value for your time. I want to quickly, for those who are not yet our member, I want to give us a quick brief on what ICBC is all about before our facilitator give us a final word. ICBC is a place you really want to be. It's a place you don't want to miss being a part of. Now, why I am saying this is because the Institute, yes, thank you. Thank you. The Institute of Certified Business Consultant is an affiliate of ICBC USA and Canada, which has a worldwide membership all over. ICBC is fully incorporated in Nigeria, and we have the right, the legal backing to function as an institute. This program is actually brought to us to enhance our professionalism, to enhance our career, to improve us in what we do. Being a member of ICBC will expose you to a whole lot, just like we have today. Our vision is to be the global leader in educating and certifying business consultants, professionals that are universally relevant to the global dynamic economy. And we have the mission to provide services to everyone in this industry. As long as you want to run a business, either the MSME or in large scale or small scale, whatever, ICBC is here for you to help you walk the path. Our services include educational programs, professional programs, training and workshops, certification of members, publication of business journals. Like we have a book we are working on, which will be launched much later in the year during our induction and gala night. You don't want to miss that as well. All those information will come at a later date. We have vocational trainings, research and development, consultancies, seminars, and a whole lot more for you. You don't want to miss being a part of ICBC. And for you to get started, all you need to do is to visit our website and just fill the form out, and then we'll get your application and keep in touch with you, inviting you for an interview, and then we take it up from there. There are a lot more to say as regards this. Who is to join us? We have, if you're a graduate member, you are undergraduate, politicians can join, professionals can join, corporate entities can join, NGOs can join, businessmen and women can join us, and even artisans can join us. We have a space for you. Everybody have a place here in ICBC. And not to bore you with all the details, I just want you to get to our website and fill the membership form, upload your relevant details, credentials, and we will get in touch with you and take it up from there. Once again, I want to say a very big thank you for having you join us today. We're looking forward to having you in our subsequent meetings. Today has been an amazing time. I want to yield the floor once again to our facilitator to give our final word before we go. Don't forget to hit the feedback form link and give us your feedback. Thank you very much. Facilitator, please. You have the floor.
Okay, so can you hear me?
Loud and
I would
clear.
like to just respond to one more question. So I think I saw a question. I can't find it exactly now. Where someone was talking about, I'm saying the cost of loans is high. If they don't take loans, how then can they build their credit score? So if you're a woman, especially, I always say women have a lot of advantages. Access Bank, for instance, that I know has a W Power loan, which comes with its requirements. And I think the interest rate is somewhere around 15% or so, not that high. Then I know Zenith, I've also seen Zenith advertising a loan that is for women that has a low interest rate. So it's up to you to review and see which works for you. You don't want to take a loan and then you're working for the bank instead of working for your business. So carefully look at your business requirements and determine which works perfectly for you. If you're doing a business that, for instance, gives you, say, 50% returns, and you can take a loan and you're paying an interest of, say, 20%, you might want to consider taking that loan, because you're better off taking the loan and making returns than actually losing business. So carefully review your business requirements before deciding on which loan you will take. I want to thank you all for attending. Thank you for the questions. Thank you for giving me your attention. And once again, I apologize for the network. Like I said, sadly, this is Africa. And if you want to catch up with me, I would share my number in the chat room. So you can reach me either on WhatsApp or via a phone call after this session if you think you need to discuss with me some more. Thank you so much, ICBC. Thank you, my presidents, and thank you to everyone who joined the call. Thank you.
Thank you, Mimi Nongo. Cosmetics industrialist. That's the tag I want everyone to take home with you. Today, we are talking about industries. We are talking about growth, and we appreciate you for what you have given us. In rounding up as the moderator for this June edition of Launch and Learn for ICBC, I would like to say that I have my checklist. One is visibility. When this was thrown to the floor, I was out, because we know we go through a lot of conferences and meetings, and we keep learning and keep hearing this, but yet we still undermine the effect and the impact of visibility. So everyone in the house, ICBC members, our participants, we're encouraging you that you be bold and strong in coming visible with your businesses, because as it is that you'll be looking for funding, we know we have seen the list of prospects from Madam Nongo's delivery, but how do you convince this prospect? One of the points of conviction is that first start being visible, come out, be bold, bring your stuff to the world. And COVID-19 made it possible for us to even work and operate, cook and dine in the cloud. So welcome to the world of cloud businesses, and be bold about it. Please update your knowledge is one of the things Madam Nongo has said. We need to be updated. Fortunate for those of us who are here, who took time out to attend this afternoon lunch and learn. Always learning is always being uplifted. You never know what the next step will be for you from learning from the other person who is an expert or ready to share information. Yeah. And this one is key. Company policies. We know we struggle as SMEs. Why do I need to bother about having policies? It's just me and my children in this business. You know what? Our facilitator today is further encourage you. Go ahead and create company policies. NGO in the house, go and create company policies. Put them, make them available, and for your company policies, they are reversible. You just keep moving, you keep updating yourself, you keep increasing, and you keep changing your policies just as your growth is coming in. Funding sources. funding sources. So I found it positive, very, very positive. Kudos to Madam Nongo, who has encouraged us to say, yes, even to friends and families, we can prepare to say, I need this funding. But you see, you need to be credible. You need to be credible. All this we've learned from her, that credibility matters. Credibility matters when it comes to other people's money. All this list he has given us is prospect towards other people's money. And then we need to be able to say, yes, we are strong first to ourselves before we are being assessed. I would like to wrap up from this end. I want to say thank you very much to the president of ICBC Nigeria in the person of Dr. A. Utomi for giving me the privilege to moderate this very whelming and very outward-looking June series, Understanding Business Financing Options for SMEs. It is said that the SME is the power in the business world of the Americas. And we know in Nigeria today, SMEs are doing so much, so much to move their boat, to horse the boat themselves. And we want to believe that ICBC will be doing so much in encouraging by bringing content such as this June series to the world, to the populace, so that we learn and will continue to be maybe more independent in our outlook, especially as Nigerians, and especially in wanting to grow our business. I would like to thank the chairman of the ICBC Launch and Learn also for this opportunity. Madam Mimi Nongo, I cannot appreciate you enough for having made this a wonderful afternoon. Most especially, I want to thank all who have participated. A lot of our participants have been here from the very beginning, even before we gave our welcome address. We really appreciate you. On behalf of ICBC, I say thank you for the privilege of listening to me as the moderator. And at this point, I'll be handing over to one of us who is the owner of this floor to take it from here. Thank you. And I would like to welcome Dr. Chris Udofia yet again. Thank you.
Thank you very much. Thank you. Before I go any further, I want to yield the floor to the head of training for his word, Mr. Jude Okwesi, the head of.
Yes. All right. Good afternoon, everyone. Thank you very much, Dr. Chris Udofia. I think it's been a wonderful training experience. I don't think we've had it this good in recent time. I want to see this opportunity to thank Mimi Nongo for a wonderful delivery. And it is quite revealing. And I'm sure we must have learned a lot of things regarding the options available for the SMEs. And we are definitely going to apply it to our businesses. And I'm sure our businesses will grow. And we will be glad attending this lecture this afternoon. Now, having said that, I would like to thank also the moderator, the president of the institute, and the council member that gave us the platform. As you know, these have been an ongoing training, and we are not ready to back down on it. I want us to be available at all time. This is just the June edition, and we are already currently working on the July edition, which will be more robust than what we have seen this afternoon. I want to thank the participants across Africa that attended this training. It's been a wonderful time having you on call. God bless each and every one of us for being part of this training. Thank you, Dr. Chris Udofia, who has been driving this course. Thank you for a wonderful work done. And I want to leave it at this and hand over to Dr. Chris Udofia. Thank you very much. God bless you all.
Thank you very much, sir. All right. So at this point, I want to introduce to us our next month Launch and Learn training. We are looking at digital branding and strategic visibility. Now, you heard the moderator talk about visibility, and you heard the facilitator also mention about visibility. You need to be seen, you need to be known, you need to be visible. So next month's edition, we are talking about digital branding. How do you brand yourself? How do you package yourself to put yourself out there for everyone to see, for everyone to reach? If you are not out there, you will be doing business in the dark and nobody is knowing anything about you. So you don't want to miss next month's series, which is digital branding and strategic visibility. You don't just create a profile online. How strategic are you online? So these are some of the things we'll be looking at. And we have our facilitator, Jade, George, and Nebo, who will be facilitating that session. And then Dr. Julie Moma will be moderating the session. I want to encourage you to look forward to the next edition. Thank you very much once again for being a part of this. And please don't forget to join us next session. Before you go, please help us fill the feedback form. Hit the feedback link right now and fill the feedback form. Let's get to hear from you. We need to improve on what we are doing. And if you want to be active and you want to be committed, you want to be a part of what we are doing, please kindly drop a yes. Just type commitment. If you want to be a part of what we are doing, you have a skill, you want to be involved, you want to explore, you want to connect, just type commitment. Just type commitment and we'll reach out to you after now, because I know a lot of people have one or two skills and they want to express them and they don't know how. This is the platform we can help you express that gift, that skill, that ability that you have. Just type in the chat room commitment and then we'll take it off from there. Once again, I want to thank the president and the council member of ICBC for this privilege to give us this opportunity to learn together and grow together. And it's been a wonderful journey ever since. Thank you so much for being a part of this also. And I'll see you in our next edition of the Launch and Learn training. Digital branding and strategic visibility. Positioning yourself for influence, positioning yourself to get clients and opportunities as a business consultant. That will be our discussion next month. I look forward to having you again. God bless you. So if you have a skill, you have an idea, you have one or two things, you want to be a part of this, you want to be a part of what we're doing, just type commitment and then we'll take it up from there. Thank you so much. At this note, we come to the end of our June edition of Launch and Learn. It's been amazing. Thank you. You made it this amazing. Thank you to the facilitator. Thank you to the moderator. Thank you to the council member and the president. Thank you. From here, have a wonderful June. We'll see again next month. Okay, feedback form. Let me resend the feedback form link. Somebody's asking the feedback form. Okay, I'm going to drop the feedback form link in the chat room and also, all right. So there you go.